Hello, welcome to another live stream of Master Investor Company. Glad to be here again with another valuable video about money, business, and investing. If you're hearing this from our podcast channel, welcome. If you're new, make sure you subscribe to the channel and leave a comment or question down below so that we can come back and answer that for you. All right. So today's video blog, we're going to be speaking about what is the difference between money versus currency. Okay. And make sure you go to our website, masterinvestor.education, and enroll in one of our digital courses. We have ebooks that can help you build your asset column with real assets using fake money, using currency, using debt, because today money is not longer real money. And today's video blog is going to be about just that, the difference between money versus currency, right? I hope you're having a fantastic day. If you're hearing us from outside the United States, let me know the country down in the comment section. And also, if you're from the United States, put your city down. I appreciate your time and business and everything that you're doing to support our movement here at Master Investor. I'm the founder of the company, Master Investors, more than an investment management company. We are here to elevate the financial well-being of humanity through high quality financial education made simple with lucrative opportunities to build passive income and true wealth. So let's dive into our blog. You can find the actual blog on our website if you just go to masterinvestor.education and go to the blog tab, and you're going to be able to see our latest blogs in there. We are publishing weekly blogs that contains a lot of valuable information that can literally change your whole life around and make you wealthier, right? So why the world is filled with fake money and how you can get richer using it. The rule number one in our ebook, The 10 New Rules of Money, is we work to build and acquire passive income and make money work hard for us. We can say that the rich do not work for fake money, or simply they do not work for earned income, which comes from a job. Okay, there are three types of income. We talk about it on our podcasts and broadcasts that we have here at Master Investor, and we always stress the three types of income that exist, because you'll be surprised when I speak to people and I ask them, what type of income do you work for? And they usually are looking at me like, what are you talking about? And I ask them again, what type of income are you working for today? Usually they're working for earned income because that's what they've been taught. Majority of people in the world, that's why they build earn income. They go from job to job, chasing money, attempting to have a higher paycheck. They need to get paid more per hour, okay? And they're willing to do things that they don't like to have more money, okay? And at the end, you're trading time for money, and that is the most valuable asset we have is time. So it shouldn't have a price, okay? Because if we learn how to protect it and we learn how to utilize our time correctly and optimize it into the things that we're passionate about, into our purpose in life, and find problems in the marketplace, in the world that we're passionate about solving, then we can literally impact not only the community and the world, but we can also impact our bank account by having positive cash flow, which in return provides us with total freedom. And that's why we do what we do here as an entrepreneur and a master investor. We are in the business to providing solutions to the world because we're passionate about a problem, and we want to do that. And in return, because we're serving a lot of people, we're being generous, we're solving problems, we want freedom. And freedom comes from having the ability to have access and excess of cash flow, right? Having that passive income coming in from real assets that are working through systems for us all day long, even while we're sleeping. That's a true asset. It's a system of systems doing the selling and telling for us because it is working hard to solve a problem, okay, that we found, and we have a solution to provide into that niche. Okay, so by the end of this video, I want you to write down your passions and also write down what is your purpose in life. You know, why are you doing the things that you are doing today? Figure out why you are here on this earth, why you are alive. What is that makes you get up every morning without an alarm clock and without having to work for earn income? Okay, so you need to figure out those things because it's going to help you align yourself with your purpose in life and be able to create opportunities that can literally make you healthier and, of course, wealthier. Okay, so if we understand that the rich do not work for earn income, we can then start asking, so what do they work for? Okay, and that's why the rule number one of our community and our ebook, the 10 New Rules of Money, is we work to build passive income and make passive income or money work hard for us. We're not chasing money. Money chases us because it's working hard for us, right? We're creating passive income through assets. And then that cash flow that is coming in, we're making it work harder for us. We grab it and we move it into a new asset that produces passive income, aka cash flow. And as you know, if you have here any of our previous videos or podcasts, cash flow are the most important words in the business language because since today, money is no longer real money. It's a currency because it's not backed up by anything but the confidence and the faith of the United States government and the currencies and the governments around the world. Then cash flow must move, right? The cash must flow, must move into a new asset in order to maintain its value. In other words, if you put cash on the table or you put it under your mattress, you put it in the bank and it stops moving, it loses its value, it goes to zero. Okay, that's why it's called fake money, because this has no value. Okay, it only has value when it moves from an asset to another asset that produces passive income. Okay, the world and money rules changed back in 1971. On August 15, 1971, President Nixon took the dollar off the gold standard. The price has been in fluctuating since the change in the law. Gold keeps going up and dollar continues to lose its value. The dollar keeps going back to intrinsic value, which is zero. All currencies in the history of the world has always gone back to its natural value. Okay. Additionally, the price of gold is the same all over the world. The lesson on money you need to understand is to grasp that money is backed up by nothing but confidence. It's just an idea. It is not longer real money, okay, because of the change that President Nixon did. The impact of Nixon turning money into currency. In 1971, like we mentioned, President Richard Nixon changed the rules of money. That year, the US dollar ceased being money and became a currency. This was one of the most important changes in modern history, but few people understand why. Prior to 1971, the US dollar was real money linked to gold and silver, which is why the US dollar was known as a silver certificate. After 1971, the US dollar became a Federal Reserve note, an IOU, from the US government. Instead of our dollar being an asset, it was turned into a liability. Today, the US is the largest debtor nation in history, due in part to this change. Taking a brief look back at the history of modern money, it is easy to understand why the 1971 change was so important. After World War I, Germany's monetary system collapsed. While there were many reasons for this. One was because the German government was allowed to print money at will. The flood of money that resulted caused uncontrolled inflation. There were more marks, but they bought less and less. In 1913, a pair of shoes cost 13 marks. By 1923, that same pair of shoes was 32 trillion marks. As inflation increased, the savings of the middle class was wiped out. With their savings gone, the middle class demanded new leadership. Adolf Hitler was elected of Germany and president of Germany in 1933. And as we know, World War II and the murder of millions of Jews followed. Also, President Nixon converted the real money to fake money currency was due because we were importing so much products like we are today from other countries. The change needed to happen because we were giving our gold to other countries' hands like China. Think about it. If the dollar continued to be backed up by gold, then today we will be given over $17 trillion in gold to other countries. And it doesn't, it's not in our best interest to do that. Okay, that's why that change was very smart to do. Okay, it made it easier for the one that's financially educated to become wealthy and rich fast. Okay, and I'm going to explain to you why. These changes in law allows the Federal Reserve Bank to back up the ongoing printing on currency and give the keys of unlimited wealth to those who are financially educated. In other words, inflation is great for the ones that are aware of the changes and play by the new rules of money. It is easier to get richer today due to the ability to use fake money to get rich. Basically, we are getting rich for free. If you understand what I'm going to explain by the end of this video, you will have not only the keys, but you have the steps to start building true wealth with fake money for free, okay? And fast. We can simply use debt, which is tax-free because money is created with debt, and invest for passive income in an asset that produces ongoing cash flow, okay? A new system of money. In the closing days of World War II, the Bretton Woods system was put in place to stabilize the world's currency. This was a quasi-gold standard, which meant currencies were backed by gold. The system worked fine until the 1960s when the US began importing Volkswagens from Germany and Toyotas from Japan. Suddenly, the US was importing more than it was exporting, and gold was leaving our country. In order to stop the loss of gold, President Nixon ended the Bretton Woods system in 1971, and the US dollar replaced gold as the world's currency. Never in the history of the world had one nation's fiat currency been the world's money. To better understand this, we must look at the definition of fiat money, which is money as paper money, not convertible into coin or specie of equivalent value. Okay, so basically it's paper money. It's not convertible into a coin or any type of equivalent value. The words not convertible into a coin can bother many people. Look up the word fiat. Fiat, a command or act of will that creates something without or as if without further effort. Does this mean money can be created out of thin air, you may ask? Germany did it, and now we are doing it. So yes, that is why savers are losers and debtors are winners. Okay? Most economists will disagree with this conclusion between the loss of savings and Hitler. It may not be an accurate lesson, but it is one we can never forget, okay? Which is that the money stopped being real money. Now it's fake money. Now it's a currency. Now it's fiat. It's paper money. It's just an idea backed up by confidence. Over the last year, we have experienced record inflation. As of the end of September 2022, the inflation rate was 8.2% over 12 months. In 2021, inflation was 7%. Inflation has not been this high in over 40 years. According to CNN, June consumer prices for gasoline were up 59.9%, food was up 10.4%, and housing was up 5.6%. In short, the middle class is feeling it. And of course, the poor class, if the middle class is feeling it, the poor class definitely can see it and feel it. And in spite of all of these record increases in prices, the federal government's economists spent much of 2021 saying inflation was transitory, meaning it will be temporary and go away. They were very wrong, and now the Fed is raising interest rates aggressively to try and tame the inflation beast. But they are having a hard time because there is so much fake money in the economy thanks to years of low interest rates and quantitative easing that is very impossible to do, to try to minimize inflation. Okay, inflation must continue to go up because the Federal Reserve Bank prints $2+ billion per day, because that's how it works. After 1971, we began to print more and more money and injecting that into economy because the banks are in the business to lend money. So that's why today money is created with debt. Okay, after that change of the gold standard being separated from the US dollar, then we created money with debt. Okay, that's what's important, that you get comfortable using debt to invest. Whether it's a credit card that you have, a personal loan, invest it for passive income. Whether it's a car wash that you're getting and it's producing passive income for you, moving that credit card, you're moving that money into a producing cash flowing asset. Okay, it's producing passive income. You're converting that debt, that fake money, into a real asset, which that is the holy grail. And basically at that point, you'll be printing money legally for free, and you are getting rich for free because the debt will be paid on its own with the cash flow from the operation, and the interest rate of that debt will also be paid with the cash flow of that business. You're not paying it for with your hard-earned income. The business is, the investment is, and it is also on top of paying that off for you, is leaving you with positive passive income. So you're basically using fake money to getting wealthy for free. Okay, what is fake money? When President Nixon took the US dollar off the gold standard in 1971, the US dollar became fake money. To understand how taking the dollar off the gold standard turned the US dollar into fake money, you need only to look at this chart that you're looking at in front of your screen if you're watching this from YouTube. If not, then go to our blog and you can have the diagram where it shows gold versus fake money. Basically, gold stays at the same, it doesn't lose its value, it stays the same, and the dollar loses its value. So the more the dollar loses value, the gold goes up. But in this diagram, you're going to see the dollar in a straight line. The yen is going down in value, the euro loses value. Okay, so now it has lost over 90% of its value, okay, since 1930, late 1930s. Okay, the dollar. How does this happen? When a currency is not tied to real money, governments are able to print more and more money out of thin air. This leads to inflation, the devaluing of the purchase power of the currency. Look at this chart to see how the US government printing money out of thin air has impacted the dollar's purchasing power. Okay, so you can see on the diagram in front of you why savers are losers. Okay, the more the government prints money, the more the dollar loses its value, and it goes back to its natural value, which is zero. This is nothing new. Countries from ancient Rome to Republic Germany to modern day Zimbabwe, have printed or debased money to the point of no return. This results in hyperinflation, where money literally becomes worthless and people use it to create fires rather than to buy things. While we are not currently experiencing hyperinflation, as I mentioned earlier, the US is facing the highest inflation rates in recent history. Given the global insecurity between pandemics and war, it is not hard to imagine a scenario where we see hyperinflation. The question is, how will you prepare like the rich do? But first, let's dig a little deeper into why what you think is money is not really money. Money is not longer money. Most people think of dollars as money, but the reality is that it is not. An amusing way of looking at this is to realize you can buy $10,000 in cash from the US Bureau of Engraving and Printing for only $45. The catch is that they are shredded. More seriously, as we mentioned earlier, since Nixon took the dollar off the gold standard in 1971, it is not longer money. Before 1971, there was a relationship between a dollar and how much gold was backing that dollar in the US Treasury. After 1971, the dollar was not backed by anything other than the full faith or confidence and credit of the United States government. Money versus currency. Today, the dollar is a currency. It can go up and down in value depending on how other currencies are performing and based on many economic conditions. It is tied to nothing and can move in either direction very quickly. In 2001, the Wall Street Journal wrote that the dollar was going up and down. Basically, it was unstable. Today, in 2022, the New York Times writes, a rising dollar is hurting other currencies. Of course, what is really meant here is the cost of dollars versus the value of dollars. Savers are losers in inflationary economies because their saved dollars have less purchasing power over time. But at the same time, the cost of borrowing dollars is higher in the US, so there is an influx of US dollars into the US by foreign investors, which strengthens the dollar. As the New York Times writes, as a result, the currencies of other countries, which are valued in relation to each other, have weakened, upsetting markets in some of the largest economies in the world, from Japan and China to India and Britain. All of this is possible because the US dollar is not longer money, but instead a currency. So what does it mean that the dollar is a currency? I find it helpful to talk about electrical currencies. An electric currency carries electricity from one place to another. In order to survive, a currency must be moving. Once it stops, it dies. Similarly, the dollar as a currency is simply a vehicle to move wealth from one area to another. For instance, smart investors who saw the route in the bond market coming in 2016 most likely moved their wealth from bonds to another sector that stood to benefit from higher interest rates and a rising dollar. Today, with inflation high, smart investors are most likely moving into commodities. It is all cyclical, but the rich know that true money is now found in assets, not in the currencies that go up and down, like the stock market and all of that, or like the 401k. All of those vehicles are fake assets. They don't produce you any money today. Okay, you could be investing in the 401k for years and years and years and years, and the market goes up and down. So you have no control over those assets, which are fake assets, because they're not producing you any passive income. Remember, the companies that you work for, they will tell you that's an asset, but it's not really your asset because it's not putting any passive income into your pocket today, tomorrow, or maybe not even in the future, because who knows? They might just be investing the money into the wrong companies that stock will crash and the company will be out of business because new companies are merging, new technologies, and if those companies are not innovating enough, then they would just be wiped out by new companies. Okay, So that's why it's important that you educate yourself financially so that you make your own decisions and you start building your asset column with real assets that produce passive income that your companies control. Okay. So the richer use fake money to get richer and make you or make others poor. Okay. In a book called in a book by Dr. Fuller, who wrote the book Grunge of Giants. Grunge stands for Gross Universal Cash Haste. That book was a revelation for many because we can learn how those with the most power in the world manipulate money to steal from the middle and poor classes. They are the puppet masters who know how to manipulate fake money to make real money and acquire vast amounts of real assets that produce cash flow. Quoting Stephen Brill from the article, as my generation of baby boomers achievers graduated from elite universities and moved into the professional world, their personal successes often have serious societal consequence. Translation: the elites got greedy, taking care of themselves at the expense of others. They created an economy built on deals that move assets around instead of building new ones. Translation: the elite focused on making themselves richer rather than creating new businesses, new products, more jobs, and rebuilding the US economy. They created exotic and risky financial instruments, including derivatives and credit default swaps that produce sugar heights of immediate profits but separated those taking the risk from those who bear the consequences. Translation: the elites created fake assets that make themselves and their friends rich and ripped off everyone else who does not know the new rules of money and financial education that makes you truly rich. When the elites failed, they were paid bonuses. Mom and pop and their kids will pay for the elites' failures via higher taxes and inflation. Long story short, the ultra rich and elites are able to utilize the volatile nature of the dollar to create vast amounts of wealth of themselves. Meanwhile, the poor and the middle class get poorer. The difference between the rich and poor equals knowledge. That's why I always say knowledge is the new money. That's why you need to get financially educated, start building your asset column, whether you're writing a book, whether you're creating a digital course, whether you have an e-commerce store, whether you're setting yourself up with real estate properties and you're putting them on Airbnb, or you are getting a commercial property. It could be an office building, or it could be a hotel. Whatever type of asset you want to acquire, it must be that one that produces passive income today that you control. Okay. And it could be a car wash, like I said earlier, right? So the reason why fake money is so dangerous is because most people do not know that their money is fake. So they do what they are taught. They save it. The problem is that savers become losers because money devalues over time and becomes more and more worthless. And if you save it, you're not learning anything, and definitely you're not learning how to invest, okay? Because you're too afraid to even put that money to work. You don't know how. The rich, and if you do, you give it to somebody else to put it to work for you, usually a salesperson, and you lose the money because a salesperson was working on commissions. He wasn't building his assets. He had a job, and it was to sell you on an idea of a fake asset, and they win by putting that money into those fake assets, and they get in a commission to do that. So they're not real investors. The rich know the difference between fake and real money. That is why rich people use fake money to buy real money, gold and silver, as well as assets with real value like real estate and commodities and businesses. By doing this, they print their own fake money, cash flow with debt that is tax-free. That they then use to purchase more real money and assets. The secret to building wealth, and that is the secret the rich know about building wealth. You can never get comfortable, and you can never park your wealth and forget about it. You must be active investor. You must be having control over your assets and decisions that you're taking every day with your capital that you have today, and also with the debt that you will be acquiring to build more passive income, right? You must always be learning and always be moving your wealth to where it will grow. Once you see that area is in danger of failing, you look at the trends, determine the next area of growth in the economy, and move your money there. Master Investors Company is investing in apartment buildings during the high point of the Great Recession. People who have no financial education will have a hard time to understand how to get ahead financially, and without the proper mindset about money, it is difficult to get people to move their wealth into real investments. The fear makes them want to sit on their cash. The smart people saw a ripe opportunity to pick up cash flowing properties at rock bottom prices. Years later, when we buy real investments, then we can sell them multiples of what we pay for. Okay. And all the while we enjoyed positive cash flow from their operations, then we are ready to roll the gains into a bigger cash flowing asset, of course, right? We're always thinking bigger and always moving that cash flow into bigger assets. And if we're selling an asset that we have hold for 10 years, we're doing it to move that cash flow and the gains of that sale into a new and bigger asset, because we have spot an asset that is producing 100 times more than what the asset that we were holding for 10 years. And that's the reason why we're going to get rid of it. Otherwise, we're going to keep it, because cash flow must always move to maintain its power and value, specifically moving from cash flowing assets to another cash flowing asset. Okay. The holy grail is to turn fake money, debt, right, into real assets that print cash flow. Then moving the cash flow into more real cash flowing assets to compound true wealth. But we can only do that when we understand the history of money and play with the new rules of money. Also, you need ongoing learning, financial education to learn about business. The better businessman or woman you are, the better investors we are, because investing is business. Print fake money to buy real assets like the rich do. Here's all you need to do. Here's all you need to do it legally. On one level, you probably already print fake money. When you save money in the bank and get interest from that bank, you are printing money. Granted, it is very little that you are printing, but you are doing it. Conversely, when we use credit card, we are printing money for the bank by paying them an interest rate. The bank is in the business to lending fake money. Now, the magic is to use the debt or credit to invest to acquire real asset that our company controls. The good news is that we can also print fake money to buy real money and real assets like the rich do. All we need to do is the knowledge and to take the initiative to do the first step, which is acquire our first asset. Remember, the path to financial freedom and wealth is all about taking action with the wealthy principles. For instance, in one of our articles, Master Investor Fundamentals, OPM, or the People's Money, we share how you can make an infinite return on investment. That's what we ultimately want, right? Earlier in this video, I explained that, when you invest, let's say $1,000 with using a credit card, you want to get that $1,000 back as soon as possible. And you're supposed to know that before you invest that money. How fast would I get that money back? Okay, so how fast would it take me to pay that loan back? And how much am I going to continue to receive after that loan gets paid? So once we pay the debt service off, then we still have control over that asset, and we still receiving now even more cash flow, because now we don't have the debt service to pay. So when you're using debt, always ask yourself that question: hey, how fast will I get the money back to pay the entire debt off? And that way you will get to what we call infinite return on investment, okay, by using other people's money. Because if you're using the bank's money, you're using a credit card, you're using the bank's money and the people that are saving money, okay? And that's all they know how to do, is save money. The bank needs to lend that money to somebody, and the bank also needs to print more money to grow their CAMO score, which is their credit score. And the only way to do that is by utilizing people like you and I, who are entrepreneurs and investors, for the purpose of acquiring real assets. Okay. In our book, How to Build Cash Flow with the Internet, Turn Passive Income On, we go into detail on how to think and act like the rich do today. The lessons we teach on fake money, fake teachers, and fake assets are essential to learn in order to make sure we can grow wealthier in a world that has and continues to change. You can get our ebook, How to Build Cash Flow with the Internet, Turn Passive Income On. Today's lesson, you already know, money is not real money. It's an idea backed up by confidence. It's paper, it's fiat, it's a currency, and most importantly, money is created with debt. Okay, so debt is tax-free, and the number one highest expense we all have is taxes. So as a master investor, you got to learn how to minimize taxes all the way to zero using the laws, using the new rules of money, and as much using debt, because debt is tax-free. So once you use debt, you don't have to pay taxes on that money. And if you invest it to build passive income, then now you can have all the laws on our favor, because passive income is the best type of income that allows us to minimize taxes and create true wealth. Okay, find more about how you can start building assets using the internet and our ebook, How to Build Cash Flow with the Internet. Go to masterinvestor.education and get the ebook. I totally recommend that you add this into your business library. It's going to change your life. And if you're an existing business owner, if you're an inside investor, right? If you are a self-employed or an employee today, this book is for you. It will help you scale your business. It will help you launch your business. It will help you build a successful business online. It's going to help you build cash flow, aka passive income. And the most important words of business, never forget this, are cash flow. Okay. And the foundation of true wealth is being able to read financial statements. That's why in this digital course that we have on how to build cash flow with the internet, we have added a financial statement in there that is blank and that allows you to fill the blanks in with your information, with your income, and however many liabilities you have, your expenses, and it's going to help you understand your current situation, how to improve it. And also it's going to teach you the best lesson of all, which is being able to read financial statements. Because when you get in the business of acquiring businesses and investments, you need to read their financial statement of each investment or business that you are going to acquire, because that financial statement will tell you the truth story about that business or investment. It's going to tell you whether that is a sound asset or that is a bad liability. Okay. And again, a liability is okay as long as you have an asset that pays for that. In other words, a liability takes money out of our pocket, right? An asset puts money in the form of passive income into our asset through a cash flow and asset. Okay, so it's a system of systems ultimately. So if we want a Lamborghini, then we're going to build or acquire an asset that pays for that Lamborghini. That Lamborghini, if it's not making us any passive income, is a liability. It will be listed on a liability column, but we can always turn a liability into an asset. For example, I can have 4 Lamborghinis and I rent them out throughout the entire month through a Turo app, right? Where owners rent cars. And so you can rent it to tourists at $1,000 per day. And the Lamborghini's lease payment, or the payment if you're buying the Lamborghini, then it's going to be $3,000, $4,000. So you just need to rent it out 3 days of the month to pay for that payment of that Lamborghini. So you can always turn it into an asset, because all your liabilities are somebody else's asset. Okay. So when you're able to read your financial statement, you're going to be able to say, okay, I'm going to grab this Lamborghini. I know it's going to be on my liability column, but I have an asset that I just built that is making me $10,000 per month in cash flow. And so I'm going to use that to pay for the Lamborghini, and I'm going to use the Lamborghini to also rent it to other people. And then once you do that, and the Lamborghini is creating your passive income, then you can list it on your asset column. Okay, and it's being paid on its own for free. You're driving it for free. The business is paying for it, and the clients that you rented that Lamborghini to is paying for that monthly payment, and therefore you're driving it for free. So it's about positioning ourselves on the market and with the right mindset and providing a solution that we're passionate about solving with a product or service, and of course building the asset column with real assets using fake money. Learning how to utilize other people's money, OPM, is key, which is debt, right? Using to put that debt to work and invest it into passive income. And if you have cash that you've been saving, then put it to work. But first, get educated financially. Don't just give the money to somebody to invest it for you. You got to take control of it, incorporate your company, and start asking yourself, how can I move this into a cash flowing asset? It could be a car wash that you're going to get to, or it could be a down payment for an Airbnb home that you're going to get into. But you need to remember that it's supposed to put money into your pocket today, okay? Once you grab control of it, it's supposed to be printing money for you, all right? So with that being said, I hope that this has been valuable to you. I'm going to see you on the next live stream. I appreciate you watching, your time, and also doing business with us here at Master Investor. I'll see you in one of our inner circles inside of our digital courses. You can find us on our website, masterinvestor.education. And let me know in the comment section if you find this valuable. If you have any questions, let me know. I'm going to come back and answer that for you. And remember, our mission here at Master Investors is to elevate the financial well-being of humanity through high-quality financial education made simple with lucrative opportunities to build passive income and